Hi, this is Simon with Trade and Perform Coaching, and I'm hoping everyone had a fantastic Fed Wednesday. I'm going to do a quick trade review for, let's see, today's Wednesday, January 29th, 2014. I'm going to try to keep this succinct and to under 10 minutes. I am not the best at timekeeping, but hopefully I can accomplish this task tonight. And so let's kind of jump into it. So, first of all, everything that I talk about is for educational purposes only. Nothing should be taken as a trading recommendation, okay, guys? Y'all got to develop your own trading plan, your own capital management plan, your own risk plan, right? And your own objectives and targets and goals for your trading business. Okay, you should not be following anyone blindly, including me. My objective here is to help other traders learn how to trade for themselves, right? That is the objective. If they're accomplishing that, great. Then my goal is met. I don't care whether you're making $100 a day or $100,000 a day. It's all the same to me. So please just don't follow me blindly is the only thing that I ask. Take the time to learn what you're doing. So going in and saying that. So this morning we talked about a couple of concepts. And the first one was that it's Fed day. So that means a couple of things. First of all, volatility was going to increase. The number two thing was that it would be hard to manage risk at certain points in the day. Number three, the thing that's been going on is that volatility has been increasing dramatically over the last couple of days, particularly when compared to last week. And that would require a little bit larger rotations for qualified trade location. And that we wanted to focus mostly on expanding our rotations away from 6-point rotations and towards 10-point rotations. And the last piece that I wanted to consider, and this is for anyone who had a down day today, is that you're not obligated to trade on every single day. Fed days look great because the ranges are huge and we all think we can catch them. But let me tell you, psychologically, they're nerve-wracking for most people to trade. They are difficult to hold on to a position. As a matter of fact, I sat and had a conversation with a client late today, and I had a position on. And he saw just how difficult that position was to hold. I don't want to go into the details of it. I didn't call the trade out per se, but it was really, really, really hard to hold the trade and was tested multiple times. And it became hard because I didn't know whether to take the profits, in terms of did I have a potential home run in my hands? Should I just take my 2 points and forget about it? Now, normally on any other day, I'm happy with 2 points, but and I'm a fairly disciplined, structured trader, if I'm taking 2 points and there's 12 points available on the table, well, I'd kind of like to get the 12 points, quite frankly, on a day like today. So those are some of the things that kind of cranked through my head as I was trading today, right? So let's kind of look at the open and see what went from there. The first thing I pointed out was that I needed NQ to have some strength in it today, right, to show some leadership on the upside. And today was actually the first day at points where NQ was actually leading ES up. The other thing that I pointed out, that we wanted 10-point rotations to look for trades, right, both long and short. Now, as it was, I did take a trade with less than a 10-point rotation because, sometimes it's just simply hard to keep up with what your plan was to do and what you actually did, right? They'll often vary between those 2 points. But I did take a short here, and I actually scaled for 4 points on this trade. And after this rotation up, now if you'll look, this is rotation up from 1769 all the way up to 1777, but not quite 10 points. This actually would have been 10 points right here. So I didn't accomplish my goal, number one. Number two, I was able to scale for 4 points. But this is a perfect example of how I scaled a quarter of the position, and I used the profit from that to push my cost entry back and to kind of work the trade from a net break-even position. And what I was hoping to do was to get one of these jobbers right here where we came down and tested the 1764, right? That would have given me a very nice 13-point trade to the downside. It never happened. I got stopped out, break even. That happens. Had a few other quick scalps in here on the NQ side that I didn't call out, but mostly that was pretty much my shot and what I was interested in doing. But even if you weren't trading, right now, first of all, this didn't set up a trade location here. And if you'll look, from this location here, this 1778.50, let's call it, right, all the way down to 1771. A, we didn't get into the zone. B, it didn't set up trade location, number two. But if you look from 1771 all the way up to 1881, which is right here, gave you a perfect 10-point rotation. I was busy dealing with stuff outside business here, and I did not take this trade, but this was a perfect setup. I said I wasn't taking the trade here. We were approaching the time where we were within 2 hours of the Fed, and the last piece of that was I really just didn't feel like taking a lot of risk today, at least on the front side. However, the 10-point rotation gave you a beautiful trade lower. I also mentioned that there would be two openings today, essentially, right? One at the beginning of the day, the normal 8:30 opening, but then another one right when the Fed released, right? Now, here's the problem with when the Fed releases is if you get this thing wrong, right, or you don't act quickly enough, you can watch a beautiful profit totally disappear. Look at the range on this. This is 1781 all the way down to 1770. This is an 11-point range. This is death to most retail traders, okay? You just cannot trade this well enough. There's too many options. There's not many people that can trade this well. And then if you look, the range actually went from 1781 all the way down within a very small period of time, right? All the way down to 1764. This is a 16-point range and a very compacted point of time with huge swings in between, 7 to 10 point swings up and down, right? Very, very hard to trade. However, if you can get yourself to be disciplined, right? This trade location provided great trade location. However, how are you going to know if you'll go back to the release in, I believe it was November or December, maybe it was later, where we had a Fed release day and the market shot up 35 points, right? It pretty much went in a straight line. Now, my question to those people who traded that is, how are you going to know this is going to contain the ES on this day and that this will contain it on the downside, and then on another time that we're going to shoot straight through the roof? I didn't hear anything different in the Fed release from last time. I just simply don't know how you distinguish that quickly enough to get into the trade and manage the trade properly. Maybe some people do. I don't. I'm not one of those people. So that's kind of my thought process that went about when I say I'm not super interested in trading this stuff. I can tell you, personally, I did try to trade it a couple times. And if it wasn't for the very last move of the day, I actually would have ended up down on commissions today. I'm not great at trading days like today. I'm not overly interested in trading them in the afternoon. As it turned out I had a pretty good day. But this stuff is hard, folks, and that's all I wanted to get across to you. Now, the other major point that I wanted to get across was a couple of things. First of all, trap trades, right? I had mentioned in the morning that if we could trade below Globex low, which was right here, right, that if we could get back above, there was a good chance for a squeeze to the other end of the range, which in this case would either be first the test of Tuesday's lows, followed by a move into the white zone, right? And so that was a potential move of 1770 all the way up to 1782. We got the trap trade not once but twice. If you'll look, so we trapped up right here. We broke below, and then we trapped in. We backside tested as close as you can get to a backside test, and we pushed all the way up into Tuesday's lows. Okay, and we promptly rejected from there and broke again. They tried to trap again to the downside, weren't able to do so, moved back above, and actually into Asia, we tested all the way back up in here into 1776. So there was the second stage of the trap never occurred, meaning we had to get above 1776. This will obviously be a key area for tomorrow, right? Above 1776, we probably have room back up into 1784, 88, then 90 and 1800, right? If we're unable to get back above this 1776, which is currently our Globex high sessions, we will very likely push and retest this one more time. The other thing that I pointed out in the morning, how am I doing on time here? Let's see, 9 minutes in. The other thing I pointed out in the morning, and again, I'm tired, I'm going to try to get to bed earlier tonight, was that we were at the very bottom of this range, guys. And I pointed that out. If we look at the ES daily range, very briefly, this right here is the bottom of the range, right? Bottom of the range, top of the prior range. We tend not to break ranges on extension. Not only that, we're extended way down. 1, 2, 3, 4. Yesterday was actually an up day, and then this is the 5th day, but we actually had an inside day on our up day, so I'm not going to count it. So we've had 4 days in a row, and we have not, and in all those situations, we are still one timing. And what that means is we have been unable to penetrate above the prior day's high in any of these sessions. So a couple of things. First of all, in order to see a major change in what's going on, I'm going to need to see us at least trade above prior day's high. We already know that what's going to require to do that is to trade just over 1780. But also I know that we're at the bottom of the range, right? If you go do your homework, you'll notice when we get to the bottom of the ranges, we tend to test and trade back up. My third point being, unless this is truly Armageddon, it's unlikely. Most markets simply don't go straight down in the line. This could be the time when it does. It's just unlikely. What would I look for to see that we are going to break this support and come down here and test the bottom end of this support area? Would probably be a gap down, right, with an inability to get back above 1762 neighborhood, 1762 to 1764. That's going to be the test. If we see a gap below that 1760 tomorrow, yeah, I'll consider a move down to 1740 is viable. Even below 1740, that brings up 1718 area, right? So I certainly think this could happen. I just think it's more likely that we're going to trade up like this first before we get a move back down. And it's possible that we can go either way after we can kind of consolidate in this. We can come back for a test up here, possible, or we can come down to test this lower range right down here. Anything is possible, right? But you got to consider these ranges have expanded, and it wouldn't be very hard to see us trading back up at 1790 and 1800 and 1820, right? I can certainly see us moving up like this and then coming back for a test here or lower. So that's kind of what I have on the radar. We're at the bottom end of the trading range. I pointed that out this afternoon. This is hard to break. At the end of the day, you trapped everyone at the bottom, and they squeezed them all the way up to 1776 from 1765, 1764 neighborhood, somewhere in there, right? Don't let that happen to you. Don't be a victim. Don't get killed. It's not necessary, okay? Think, stay balanced. Don't get emotional in your trading. Let everyone else get emotional and let them make the mistakes. So that's really all I had to point out. The key to today was, right, reduce trading. 10-point ranges were very, very important today. I'm going to point that out right here. 10-point ranges paid beautifully. 81, right, down to 71, gave you a beautiful rotation back up. If you looked at 76, right down to 66, gave you a beautiful rotation up. From 64 up to 74, right, there's no zone there, but the zone right above, great trade location back down. It's not just the zone, it's the size of the rotation. And if you just have to be patient, let those rotations come to you. And key to trading a day like today is you have to have the willingness to take the stops, right? They're going to happen, and there's no easy way. There's no easy way to trade these things without taking some risk in there. And oh, one more thing that I suggested, by the way, that was very important for the day. And again, I apologize. I'm tired. I don't think I'm being very effective here, but I'm doing my best. Cutting trade size. One of the reasons that I was actually able to garner some of the profit here on this move back down, I forget if it was here or here at this point, but either way, was because I had cut my trade size in half and doubled my stop, right? Now, as it turned out, I don't think I actually needed it. It turned out it was right here for the first time, right? And when I got my scale, I moved my stop down to right here. So, but the point to that was that if you had done that, right, on a normal, in normal circumstances, right, if you took this trade here and you took half size, this push all the way to the back of the zone, right, still lets you survive long enough to get a scale or get out of this trade and have it push all the way up for an upside test. You got to consider that in a higher volatility situation, reducing your size, increasing your stops, and still you need fantastic trade location to make everything work. So I hope this made sense. I'm tired. I'm going to go get some rest. I'll be at it bright and early tomorrow morning. My name is Simon with Trade and Perform Coaching. There's no need to blow up your accounts, guys, while learning to trade. This can be done in a very systematic manner. I oversee and see traders make money on a daily basis, on a regular basis. The first key is to get them to stop losing money, then turn them hopefully relatively quickly into profitable traders. Hope everyone has a good night. I'll see you all in the morning.